Hi, this is Liqian Ren, Director of Modern Alpha Wisdom Tree ETFs. Welcome to China of Tomorrow podcast series, where we navigate China, India, Japan, and the broader emerging markets with members of Wisdom Tree and other industry leaders.
Hi, today is September 9th, 2025. We are back after a summer break. You can also, for more frequent updates, you could follow us on Twitter. I'm at LIQIAN_REN on Twitter. It's just a faster way to communicate information, and I've been tweeting some of the macro equity points that a friend has been, a private notes been allowing me to share. Today, we are just going to quickly mention the Chinese military parade, how it's impacting the Chinese equity. And for this current run of Chinese equity, is it similar to 2015 or 2016, which I'll explain. I think it's different. And also, I think the Chinese currency is in a little bit a gradual appreciation, and it's likely part of what the US-China is in the negotiation. So if it's very gradual and PBOC has a lot of control, it's actually very difficult for speculators to make money. So we'll quickly comment on the China's military parade and how different this currency appreciation, a very slow appreciation that's difficult to take advantage of as a speculator, but you could if you invest in Chinese equity. And then thirdly, how is this equity run up a little bit different and how it's not different. So quickly on the military parade, I think I'll admit, this is my first time watching a military parade. I think a lot of people probably watched it. I grew up in a very different environment. I grew up in a village, and in the village, life is just not that common in the cities. You are very away from politics. Now that's also changing, but 20, 30 years ago, it's a very different life versus living in the cities. Obviously poorer, but also a little bit more freedom. So I've never even, pay attention to Chinese politics until recently, now that we have, quite a significant Chinese investment. So actually for this military parade, I would say forget about a lot of the social media read. The one read is that it's actually positive for Chinese equity. Because if you understand why, China put up this kind of parade, is to kind of show, to the US, that it has the capability to counter, whatever you say if there's a conflict over Taiwan conflict. And I think this whole idea of peace through strength, the President Trump has said, is in some way is similar from China. China doesn't want to fight a war over Taiwan. Why do you want to fight a war? Literally, 20 minutes away from your mainland, right? But it does want Taiwan to have to be back or to be part of China. So the strategy is to say, militarily, it's similar with the US. So both sides doesn't need to fight a war over it. Final solution should be a peaceful solution. So as you can see, actually the parade, if you understand the purpose, and the secondary, the parade is to also unite the people in China because the economy is not doing well, and patriotism has been very effective in uniting China, in particular because China's history in the last 150 years, because it has, really literally, gone from leading power into almost disintegration in the 1930s and 40s. I think many people maybe can understand, but truly, I think unless you really understand Chinese history, it's something which not people can easily understand this psychological mentality in China. So So I think if you understand why China is put out a parade and how US sees it, it's actually good for China, for equity, because that means in the next 2 or 3 years the risk of Taiwan conflict is very low. I think Taiwan has some opportunity to see the local politics and the mainland, how it's feeling in terms of its Taiwan policy. So that's positive. There are a lot of other, social media heavy topics, like, the quick talk between President Xi and Putin on longevity, on living for, 150, and also in terms of, how the army, which is the nationalist army that actually went to Taiwan, they actually led the main anti-Japan. But I think those things is really misread and overread. In China, people pretty much understood that the Nationalist Party played a major role. But the problem for many, and it's celebrating as a country, it's not celebrating as one party's victory, right? But obviously for the Communist Party, it also want to say it's the party's victory. So again, a lot of politics, a lot of censorship goes on. A lot of China is not, free, completely free speech. But I think overall, the economic message is that it's actually good for peace in the near term. Now that also poses a challenge for the U.S. Actually, I think President Trump's response is very interesting. He was very candid. He watched it. Obviously, as the main competitor against, with China, U.S. We'll watch it. I'm pretty sure CIA, Defense Department, everybody needs to watch a little bit, because you have to understand your competitor, right? And this parade has a lot of information in it. The formatting, the kind of clothes, the president she wears, all trying to send a message. So I watched a little bit too. I didn't watch it the whole time with all the kids. I just don't have time. But I watched a few important segments, the speech, and then the short segment when President Xi, kind of have this talk and echo with the army. Those are all standard party language, emphasize the party's role. So all those, I think you do need to watch it if you want to, have a good understanding of China. So on the parade, and secondly is that side note. So China equity has been doing well, and I think our baseline is still that you do want to have some exposure to China, but at the same time, China equity is higher risk, so you really need to be prepared, to when that risk comes. And what's different this time versus before is that the before consumer discretionary, like the JD, the Meituan, those consumer tech companies generally do well, but now that's not enough. Alibaba is doing well because it has this AI play, but if you don't have this AI play, you're not going to get that premium. So I think right now China equity is going through a broader rise up than just consumer discretionary. I think in you can look at the performance. We cannot discuss performance in the podcast, but you can look at performance. It's pretty clear. So that's different. And the other thing that's different from 2015, 2016 run up and crash, as many people are using that as an analogy, is that at that time the interest rate is much higher. And now the interest is really low in China. So there are a lot of people who will be willing to, put some money in the equity market. And that's going to support the equity market to a degree. And then the third thing is currency. So Chinese currency, if you pay attention, is being in a little bit appreciation mode against the US dollar. And I think there, China is also, you can see under pressure, or it's likely to guide it toward the forward rate. in the near term, that's going to make speculators harder, because right now the US interest is higher, and then you have a built-in discount or built-in carry if you buy US dollar versus buy Chinese yuan. So anyway, I know it's a little bit difficult to for people who are not familiar with currency to understand, but essentially right now the US interest rate is higher. So if you hedge against Chinese currency, you'll be paid. But if you do the opposite bet, you hedge US dollar, then you're gonna have to pay, and that payment is about the interest rate differential. And if the currency, if the market is expected, to go there, and then the PBOC guides it there, then you don't get to make extra money. Again, it's a little bit difficult to understand of FX and for people who are not, but essentially it'll make currency speculators harder to make money for this kind of situation. But if you invest in equity, Chinese equity, you will get that currency kick when the currency goes up. So I think those are our main points, and you can always follow us on our website, wisdomtree.com, US site. You can listen to us on Spotify and Apple. You can also got questions, comments, leave it on Twitter. I generally try to try my best. I think a lot of the macro comments, it's a little bit harder for people who don't do day to day, but I got some friendly help, so that help me getting more in tune with the market, what's going on. So, and particularly I think if the US is in a cutting cycle, that also helps China, because the interest rate differential will reduce. But again, China's macro economy right now is not necessarily doing well. The housing is also in a difficult situation. But again, market sometimes is not necessarily completely tied into the macro, right? So that's where it makes the stock market, difficult for typical ordinary person. So I think ultimately you want to think about your portfolio in terms of how much, China you want, and how frequent you trade, which is, really, you need a very skilled trader if you do more frequent tactical trading. For our emerging market, the China portion hedge is 25%. That generally is still, kind of tactical model is still suggesting there is still a bit of room for appreciation for the Chinese yuan, which we were not hedged last month, so that had helped us. Again, a lot of it, we try to bring the best, and feel free to give us comments. And in the next couple months, we will bring speakers who have written books about their experiences in China, about China's testing, about China's during Qing Dynasty, how religion is used as part of governance. So we will bring those longer form conversations down the road. And if you have any suggestions, also reach out to us. Hopefully we can bring something different from a typical discussion on China. Thank you.